right? Appreciate the names. Yeah, they're doing well, man. Doing well. Just been a lot of wrapping up also the soccer season. The guys that coach little have a little soccer school, and yeah, it was I did a we did a 12-hour shift yesterday from 7 a.m. to 7 p.m. We left the house at 7 in the morning. We got back at 7 p.m. All with soccer. So yeah, it's been good. It's been good. All right, yo. Let's go ahead and kick it off. As always, right, these calls are for educational purposes only. So, yeah, let's quickly review last week, and then we'll kind of review what's been happening in the year and see how things play out. So, the last 2 weeks have been bullish, excuse me, bearish, closed bearish, and so we literally the price range did not leave, the high. Usually, that's what we're happy. We're looking to. That's what we're looking um to happen, every time here. So if you look at these last weeks here, guys, right? Just simply notice how, a low and high, and then the following week, right, it made the higher high. The following week, it also made the higher high from the previous, right? And so forth. So that, and simply because, the previous week was closed bullish, the next one is supposed to, uh, you know, close bullish as well, but also make a higher than the previous high. And this is just I'm looking on candlestick by themselves, not structure or anything else, just on the pure candlestick, right? So this week, 2 weeks ago, it was bearish, okay, and it made the lower low. This last week that just passed by, it stayed inside, right? The price stayed inside, never making a low, never making a high, right? And usually when this takes a while to consolidate, ranges usually explode in the other direction. That's what happened to this price action, I believe, in a quarterly scale. We weren't able to see it on the weekly scale, but where's it at? I knew it was a monthly scale, excuse me. Yep, right here. If we change the candlesticks, give me one. Give me one second. I'll be right back. Alrighty. Yeah, so on a monthly scale, let's see, here goes the start of the year right there. And again, though, right? Bullish candle, bullish trend based on the month. Controlling direction is to the top, so that's what it means. And from there, right, the next months, they were all making higher highs based on the previous candlestick. Here goes the April candlestick. You see that here? It created its range, and then it created 4 consecutive months. 1, 2, 3, 4 of inside bars. Okay, inside bars, and then the moment we broke out, boom, to the top side. Okay, boom to the top. Here, yeah. So a a previous bullish candle will yield a bullish move, right? A bullish move because it can get tricky with that one. And again, it also depends to where we set our take profit. Because remember, guys, our goal, and I'm going by this by Dr. Lucas's comment right there, the bullish continuation. But our job, right, is to find an entry, find a stop loss, and provide our take profit. Right, that's our job as traders. Um, is nowhere to enter, or just make it easy, right? Nowhere to enter, So know where to enter. That is our number one thing. And then our number two thing is know where to exit, right? Okay. So exit how? Exit in your stop loss and exit in your take profit. Okay. Your stop loss obviously is the one that determines your risk. If you want to go proper risk to reward scenarios. But that's our job, right? It's okay, where do we enter and where do we exit? Because if you're not going to hold a trade for like weeks, months, okay, um, we just want to make sure that if we, let's just say, for example, like how we always use the Fib, right? We always use the Fibonacci retracement tool. Um, and the Fibonacci retracement tool is the guide that lets us know, you know, where to enter, where's your stop loss, and where to enter, where to exit, basically. So if we have this impulse in this direction, you measure it, okay, like that. So our entry area is below at the 23%, or more specifically, we would love to enter in that zone right here, okay, in the level of 38, 50, and 61%. All right, so where's your stop loss? Well, your stop loss is determined by how many pips you want to risk, or if you want to do a proper technical stop loss, the stop loss will be down here, towards the low where the strong move started. Okay, that'll be your stop loss area. And then where's your take profit? Where you take profits at the extensions. Okay, this is where we will take profit. So, okay, so we recognize the bullish impulse. We wait for the retracement to come to these price levels, and we enter, and then we want price to get over there. Okay, because the worst thing that can happen, right? Specifically what Dr. Latrice was mentioning, right? This is the bullish continuation. If this push up is the bullish impulse, this is the retracement, and then this right here, right, is the continuation. But it doesn't mean that the continuation will, because again, right, the candle can wick. We can get something to where we get the pullback, right? We get the pullback, we enter, and then we enter here, and we get price to push up, right? Like we wanted to. This is a candlestick right here that I'm illustrating. This is a candlestick, and price touches our exit point. Okay. But then what happens? We get a strong wick to the downside. And the next thing you know, price is very close to our entry. Make sense? So that's the whole thing, right? That's the thing. If we can find ways to master that, know where to take profit or know when to exit, okay, that's the key. That's the key that will keep our I guess you could say our confidence up, because you're taking profit, right? Hey, what's up, Sandra? You're not getting sucked into that drawdown. But yeah, nice bullish candle. So technically, this was April, May, June, July, August. Okay. So technically, right, this candlestick in May, we wanted price to go higher, but it didn't. They just got stuck. And then the moment we create this engulfing pattern, okay, look at that. 1, 2, 3, 3 consecutive bullish months. A nice strong rejection to the downside to close October. And November is still, kind of the way it is right now. I'll just kind of scale it back down to the weekly scales that we have. And see 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 consecutive. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 9. 9 consecutive bullish weeks. There's actually a video that Andre shared to me on Instagram where so another trader was sharing, or he did his analysis, that there hasn't been he expected a reversal because there hasn't been more than at any period in gold's time, there's been weeks where it's been, bullish for 9 straight weeks. It's never nine, never nine. Let's see here. 1, 2, 3, 4, 6, 7, 8. Yeah, so he expected that there. So yeah, it's been a bullish scenario all the way. And we got this big drop here. So let's let me refresh that here. And right here, right? When this candlestick closed bearish, okay, this one. Once we hit that lower low extension, okay, we're technically the week is done for us because we're trading with the volume of this, right? And pushing up. So the moment this candlestick closed, right? It closed just above the 23%. And it opened at that level and went down, made the new low. And then there it goes. Touch the extension. Right there for us, guys. This should have been the trading goal this week. From 23% to the -2 extension. Now, again, though, the market is fractal. You can see this patterns on every time frame. Every time frame. Okay. Every time frame. So, I mean, obviously, this is a lot more pips than we can ask for. But again, though, we were present during this move, and I think we were present whenever we took profit there. But again, this was a move of $190, which is 1,900 pips. You see that? Like, wow. So that was a big one. So that's if you look at things, per week. What if you look at things per 3 consecutive impulses, right? Or bullish candlesticks? Well, with that drop here, let's measure those 3 candles. Okay, that's the zone of those 3 candlesticks. Right there, perfect. Okay, you measure that low to high. Okay, came back in, right, and touched the 78%. So normally here we mentioned before, right? If we come back and enter around 61 and 78%, what's the strategy here? Take to our entry, it's so let's say if we enter in between the 61 and 78%, right? And 78% being the institutional level or below. Let's say we enter at the 78% in this example. Our take profit for this one, stop loss at the 1. Okay, and the take profit is at the 23 extension. Okay, and let's see what happens from here. So this move, obviously it's in a weekly scale. We should still be in profits, right? We should still be in profits, but it never came back in and touched the exit. Animal, what's up, man? Good morning.
Morning.
Welcome in, man.
Thanks.
But yeah, okay. So here's kind of like we're debating for this next coming up, right? Are these 3 bullish candlesticks, are they the ones that still have the control and are still trying to take us to 23%? Or are we going to start getting some momentum from here? Okay. So here's the thing, right? If these 3 bullish candlesticks on the last 3 weeks do have the control, right? They could take us back up to 50% or 38 or 23. Okay. And then once price reaches back these levels, the selling points, okay, remember the opens are an area where there's a lot of volume. So this is the open of this candle and the close of this candle. It's the open, and this is the close. See, the open is very near the 23%. And then this second open is right here in between the 50 and 38%. So let's assume, right? Let's assume that price is going to get to the 23%. Okay. So when as price is traveling upwards and it gets in between there, the 38 and 50, what's going to happen? We're going to get some seller's reaction right here, correct? We're going to probably get a stronger pullback than normal. So to me, right, this is where areas where it's an important take profit area. If our entire destination is 23%, right? Think of it like going on a road trip, right? On a Tesla. You gotta plan out, right, where your stops are. I don't have a Tesla, but my brother-in-law's does, and I've shopped for one in the past, and at the beginning, how do you take road trips, right? Well, there's a map of where how much, they'll calculate how much, uh, uh, I guess, gas you have left, or, fuel you have left. And then it'll tell you, okay, you got to stop at this one right here before you continue, because you got to charge up, right? So same thing, right? Let's say this is the road trip that we're going to, right? And, this is Texas, and I'm going to go visit Chicago, right? My Chicago friend here, all the way up in Illinois. All right, well, I entered here in this area. Once we get to, halfway there, just past Oklahoma, right? We gotta fuel up, because we have to stop, and that stop will yield us, we'll lose some time, right? And then we go up again, okay? And then we finally reach our destination right there. Starting to snow. And we're starting to get a cold front over here, guys. I think 60 degrees in Texas. But yesterday was like 90. Yesterday was 90, and I think today we have a little cold front below 50 or something. But yeah, so that's the important thing, guys. Is like we can hold all this. We can hold it if you want to, but we cannot get distracted with any of the intraday stuff that's happening if you're trading on the scale, right? That's why knowing well, that's just charts. Yeah, good one. Yeah, so that's kind of where I see things are. So um something tells me, right, that that it does want to go at least back to 38%, maybe 23. Let's see how it looks on the daily. Okay, that's how it looks on the daily. Okay. We have a nice little demand VC up here that could, be requesting some equilibrium to get there. And yeah, there it is. Okay. So the question is, right? So if our goal is to get to 23%, obviously we haven't held we did not hold the position here, right? This was the Instagram entry level right there. So now, if we set our destination to be at the 23%, all we got to do, guys, is basically study that price action right there. Okay, that's all we got to worry about. Okay, we set our destination to get over there. Now we just got to our, set our the navigation. How can we get there? Okay, 61% is there on down fit. Yep, and that's right there, David. That is how you start training your eyes and flipping this fib. See, so David's comment is based on this being an impulse, correct, David? And because that's an impulse, you can measure from high to low, and there goes 61%, which is also Andre's move that he looks for all the time. And so reality, guys, based on this, right? I think to me, like the fib is the roadmap to everything. The question is right, can we find a consistent low to high move that we can always measure, right? That's kind of what we do here. So measure, what I measure personally, right, is three consecutive candles. Okay, that's what I always measure personally. Also, one previous week or previous day. Okay, candlestick. And then for entry as well, you can always do those for entries there as well, especially when the market is trending. And then the other one is obviously the ETN candles. You can use those right there. So those are the three things that I measure. Oh yeah, and then obviously the 204 frame. Those are the three, or four, excuse me. But yeah, that's kind of what I'm looking for. Where can I slap a fib on? Let's put it like that. That's what I'm looking for. So either three consecutive candles, the previous weekly day, or weekly candlestick, an ETM candle, and then the 204 frame. They communicate. These four things communicate to me control and direction. Okay, control and direction. Around 4,100. Let's see. Okay. So that's 38% level. So that's what 100. But yeah, that's basically that's how you can use there's always an impulse somewhere, though, guys. There's always an impulse in the way or not, but control and direction and momentum are the ones that lead the market overall. All right, so
Yeah, on those four consecutive areas that you look for G money, which one you give precedent on? I know in the past we used to focus on the ETM candles, but we got some more stuff added to the mix. So which one you focus precedent? It really doesn't matter. Or there's one that it's just based on what you see.
so great question there. So for like specific entries and take profits, right? Um, I mean, intraday, we're looking for ETM candles intraday. When I say intraday, let's just say the 1 hour time frame is lower. All right. But to mark up a chart just to kind of create that map, all those four are the ones that I'm looking for simultaneously. Right. So yeah, because you do have to make sure that you got the bigger picture framed as well with the fib, because if not, right, we'll be taking too many. We want to be taking more trades in the direction of the trend or the impulse. So that's why it's important to definitely do mark up the higher time frames, the weekly candle and the daily candle, because we want to be more consistent in we want to make sure that we're taking trades in the impulses, right? And not here. We don't want to get caught taking most of our trades here. We want to be riding these big moves. Not riding them, excuse me. You want to be in the direction of these moves every time. Um, Let me give you guys an example here. And like for example, when you see when there's an indicator that gives you signals, like the one that's used in people in the COC life. Um, when we go back and back test the results, like let me show one here. Again, pretty straightforward, right? Uh, it gives you that when the candlestick closes, it gives you a signal to enter your entry and your exits. And this one obviously lost, right? This one lost. But when you look at the other ones, this one bought, and you see the trend continuing afterwards. Okay, that's a good indication that it's not just giving you entry and exit, but it's giving you an entry and exit in direction of the trend. That's perfectly fine. And the only way for us to get entry and exits in the direction of a trend is to always frame up, the weekly candle and the daily candle ranges. But more specifically for entries, obviously the ETM candles are still there. Um, but I'm just showing you guys different ways to get in, right? Because you just never know. Um, and this right here, right? See this one? Nice buy, and it took it up. And that's a perfect one right there because it gave you more than it was supposed to. Let me see another one here. Let me show you an example of the one we don't want. Repeat the four, yeah, KG. So yeah, the four is obviously three consecutive candlesticks, right? Three candles in the same direction. Two was it the previous week or previous day. This is to put a fib on it, right? Third one will be like the ETM candles. And then fourth, this is kind of where you use the 204 frame. Just kind of like a top down scenario too, Mr. Ron, right? 204 or or a single candle entry, right? A single candle. And the single candle entry, right? To me, I would say it's 4 hour, 1 hour, or 15 minutes. Okay. So you guys want to write that down here? It'd be perfect. So yeah. So, and this is just more about where to put a fib on it, right? Where to find the control and direction fib. Okay. Um, and three candlesticks are also, you can actually find three candlesticks in this area as well, right? Because sometimes there's three consecutive 5-minute candlesticks which make up the 15-minute one, right? But in the reason why it was number one up here was because of the I'm in the previous week. I was in the weekly candle scale, and that's the reason why. But no, it's all these four, right? Like that. All right, so let's do a quick top down analysis, guys. Actually, no, I wanted to show you guys the I'm working with a little small group to help me back test the new updates on the SMT. Okay. I just added the flags, but the flags are really, really helpful. I've been noticing. And especially to kind of let us know where's it at? Oh, there it is. All right, this is the current one that we have. Okay. This is the current box that we have to frame up. It gives us the frame, the 204 frame, and the momentums in there. It gives structural momentum timing. But notice this flag that we have down here, right? Notice the little flag. Let me hide the 204 frame. Let me see. Remember, these are really important, right? You don't see them, right? But see, this high right here, up here, that's the one that's controlling the bigger frame. This one has it on the 108 box, but we don't have it on the 52, and we don't have it in the 17. It was just a matter about coding things, right? And now with the update that I'm building, all right, we can show this one. You see right there, guys? This right here, it tells you where the control and direction is. So the 204 box, the control and direction, because the flag is above, the control and direction is downward. Yeah, see that? Let's see if I can do this. Yes, yeah, perfect. All right, perfect. Let's just stick with the 204 frame. Okay, right there. And let's see if I can find some good opportunity, some good it's been a little bearish this week. Let's look at it like this. Perfect. I can't hide the flag. I can't hide the flag. But here it is, guys, right? So here, structure is bullish, right? On the 204. Okay. And until if we were just trading the 204 frame, we just simply look for buys. You see how price, oops, there goes the wind down. And we had a big pullback there. It's not the best example, but it's fine. I was looking for a trending example. And then we can explain why that happened there. But this is important here, guys. Okay. This is the reason why these flags are important. And obviously, you guys know that these boxes, they're all calculated based on the Ichimoku settings, right? The numbers have been back tested and so forth. But see, here's the 204 frame. Notice here, so we're always looking at dynamic structure. Our looking left is always dynamic. It's never fixed. It's never fixed. Okay. Our looking left is dynamic based on how far we want to look left. And on an intraday scale, we always want to look left at least the last 17 hours, right? Which is a 204. So notice here, right? Even though we're bearish, right? This is the high, and this is the low, and this is a deep pullback, like what, above 88%, give or take. Let's see, let's measure it. Yeah, it's an 88% range, a big time institutional level. Okay. But what is going to happen to the foundation? Because that's the high of this institutional level. Because that flag is so close to the edge, right? In a few more candlesticks, it's going to break. Right? It's going to break. It's not going to be as strong anymore because it's at the edge. Okay. And the moment these candlesticks cannot hold the impulse down, this little thing here is the little flag is going to latch on to the left, the highest high, or if these highs go higher than this, it'll switch into a bullish structure. So as we continue going, look at the little flag, how it moves. You see, now where it's at, now it's a bullish frame, that's a bullish structure. So the momentum has shifted. Okay. And then you hit play. And there it goes. Keeps pumping up. See, above 204, keep pumping up. So all these little flags, all these structure flags, they all work the same. Okay. We just have 4 of them to kind of help us guide the next move. So I mean, this is actually a pretty nice view, right? Of things where you can just use one box and then use the rest, right? Look what kind of trend those 3 are building. Okay. These 3, the 17, the 52, the 108, they have a bearish structure. Those 3 are combating the impulse, the bullish impulse on the 204. Okay. So now let me add in there the 17 right quick. All right. So all right, let's do this. Let's just take some votes here. Which is some feedback here. We have it, let's see. We have a bullish impulse, correct, on the structure. Will you guys agree to that?
Yeah.
Yes, right? Yep. So we do have a bullish impulse, but we also have what? Would you guys say this is a strong pullback? Both 17, 52, and 108 have provided us a strong pullback, right? All the way to the downside. Is everybody agreeing with this visual right here? Okay, with this visual. But do notice, right, there's still some time left over here, right? So it still has some good time left. It's not at the very, very edge of things. But yeah. So as of right now, is structure versus the momentum. This is the structure. Well, that's the thing, they all have structure, right? But these 3 boxes represent the momentum more than this one. The structure is structure versus momentum. And right now, it looks like the momentum is winning. I would say the momentum is winning down. Right? However, let's turn on the 17 box. Like that. Alrighty. Remember that little example we showed about the 204 flag expiring? The 17 one is also about to expire. Everything is bearish right now. If we were bearish on this, I would say that this is a good entry because we're at the 50% of the 17. We could put our stop loss there and then we take it back down. Right? It's not it's a good thing that we can, that's what we can control, right? We're entering at the 50% of the 17 and we can take it back down. Okay, maybe back to the lows or whatever it is, right? Just take it back down. Always 2-1. Okay, so let's see what happens there. All right, we're not at the edge, right? We're at the edge of the box now. We did get a nice impulse in our favor. But let's see if the momentum is really there, okay? Well, actually, no, the momentum, the 17 is in danger, right? Because it's about to come lower, okay? So what just happened there, guys?
Bullish.
The 17 turned bullish along with the 204. So now the first momentum change, KG. Yep, the first momentum change. Let's see the second momentum. Okay. This one's also about to drop a little bit, but again, you guys see that. Let's just stick to the example here for easier purposes, right? Like this. Okay, just the 204 box and the 17. Thank you, Joe. We'll put this recording here ASAP on the YouTube. 204 and 17. Right? Also, the candlesticks being above the midpoint is in the bullish territory. All right, let's see what happens from here. Okay, now we got a little bit more bearish now. Okay, that's interesting. Okay. Again, though, this 17 one is always the one that kind of shifts the most frequent because there's only 17 candlesticks in there. Let's see what happens. Sellers one more try. And they put us back in profits. Very good. Let's see. But they just cannot trend us down. They were appearing, right? They were popping up the seller, but they just cannot trend us down. And that right there allowed the 52 to get in a bullish position. Let's see what happens here. Back bearish. Uh-oh. So now everything turned bearish now. Oops, sorry. I need to erase that. It's a left. Bring it back. So now everything turned bearish. And see, what was our? I can't believe I erased my take profit thing. Anyways, but you guys see how the system works, guys? Just visually working on structure, momentum, and so forth. This visual, I think, to me, is really, really, really key to see. And again, there need more eyes on how to read those structure points from there. Let's see. Let's see. Let's look at the bullish example again. Oh, that was a big drop. I remember that. But it made I remember this drop. It was a 30-minute rally-based rally they were trying to use for the buy. Yeah, a huge drop, I remember. But let's rewind to there. See, at some point, when those big drops happen, all three, right, have that same structure. And that can't stay forever, right? It's going to continue going. You see how the 17 kind of just the only one that followed. Everything else is still up there. Something else that that I want to show you guys visually is this, right? Even though everything is bearish, when can you potentially counter back towards the 50%? Well, when the candlesticks get above, okay, the 17 midline, we have some momentum to balance price back out. When the 17 is below like this, we also have some momentum to balance back out as well. Okay. And if you see those moves, absolutely, Dr. Patrice. Okay. See, notice there how that 17 had enough momentum to take us back up up to that midpoint, even after this huge drop, right? Let's say, for example, here, guys, we see a huge drop coming, and you're telling yourself, like, all right, you know what? It's got to turn at some point, right? That's a huge in there. Okay. Obviously, we don't start buying from here because we saw something to the left. We saw a 1 minute fair value gap. You don't start buying because of that. Okay. When do you start buying? When you find some confirmation, right? And based on the confirmation that we're seeing here, it's not ready, right? It's not ready there. Not ready. Okay. Here, we could say it's starting to get ready. Why? Because we closed above the midpoint line. Okay. And if we closed above the midpoint line, we can enter there in our stop loss down here. Alrighty. And at least back to there. But still, right, this is kind of more like like a pebble edge. Okay. Absolutely, Dan. When you see, I'm building the system so we can kind of stick on that time frame there as much as possible.
That would be nice, if possible.
And then right there, and there, perfect. So here, guys, this is the best confirmation that the price is ready. The flag is below, is creating the bullish impulse. We're above the midline of the 5 minutes of the 17 frame. And there it goes. Boom. So that's the importance, right, of letting time pass so price can adjust, and also the importance of that box, right? Like nice little
So
visual.
with the flag, would you still have the momentum box, or that's something that you're not gonna need anymore?
I mean, they're all there. Yeah, they're all there, Mr. Ron. See, they're all there. But again, these are important. And I guess this goes back also to the question you asked too, right, Ron, where like you meant like how I mentioned those four things of of what I
Right.
same thing. Like what we're teaching, what we're showing, it's all the same thing. It's just a lot of moving parts. If you don't need a lot of moving parts, you just could simply just go with the 204 and the 17, and you're good to go, just so those other boxes won't get in your way, right?
What I was talking about, where you had structure and momentum, you say you don't go against mom. Remember that little graph that you
Mm-hmm.
had at the bottom? Is that still part of it?
Oh yeah, absolutely, yeah. Because the 17 and 52 are the momentum. I mean, and again, structure, momentum, timing. That's the thing, right? Each box independently has all those three features, right? But then at the same time, all of them collectively use them as well. Okay, so
Yeah, you just happen to have the legend that
Yeah, that's
type.
what I'm talking about. A legend. Yeah,
yeah.
that's
Oh yeah, yeah,
you know.
yeah. I got it there. But yeah, just on the visual thing of candlesticks, right? Let's say we're only trading with the 17, right? We're only trading with the 17, and you saw this big old drop over here, and you're like, oh no, this drop has to correct itself, right? Has to correct itself. Well, I want to buy but I want to buy with some confirmation. So I'm waiting for structure or I'm waiting for an impulse to get created. Okay, so the very first thing we have to let it do is let the little arrow be at the bottom. There it is. Okay, so now we have our structure. Little mini structure, or we want to just call it one structure, we have it there. Okay. And then the momentum, we're above the midline, so the momentum is bullish. Okay. And we can technically enter again there. We have a little 5-minute rally, base rally. That, and it's a good example right here, Mr. Ron. So check this out. You know, we always enter at the midpoint line, right? Of these boxes. But if we look left here, right? What do you have right here? A little rally-based rally, right? So this little rally-based rally may not allow us to come to that midpoint line. So that's where we have to kind of increase our entry there just to that wick, right? And even our stop loss, right? We don't got to put it this low because we know that the stop loss of the rally-based rally is this first candlestick. So that's the reason why you kind of keep an eye on those things, right? Because momentum can shift. Entries can come in slightly different variables, and we only try to use those 4, and there it is. And then we can at least take it back and we're kind of guessing now, going to 2 to 1. And there it goes. I don't even think it hit our entry, but very close to it. Okay, very, very close to it. And see that, and that was just using one box. That was just using one box right there. So that's the momentum. And then the last thing is yeah, so that's kind of one of the updates there. And the most updated one of them, let's see, on it. I showed that one on purpose, but this is kind of the one that has the flag here, where it'll communicate to us, you know, which one is bearish, bullish, and so forth.
That's what I was talking about.
Got it. Okay. Yeah, right there. Okay. I'm still kind of working with this here, just to kind of see what's the best format to use. You know, I don't want to, you know, but again though, right? It's kind of color coded in the sense where which was a good move that happened, I believe. It's a really good move that helped us, I think, on Monday. Yeah, this one, Monday's move, was a very good one. Yeah, right here. Notice here, right? Everything's color coded. The structure, like all the structure are here. Structure is bearish. I do have a lot of coding on those midpoint lines, guys. A lot of coding in the midpoint lines where not a coding, excuse me, a lot of rules for the midpoint lines now. That was back testing, just so we can focus on structure first and then momentum. But again, structure is the one that is controlling everything now. Once time flows forward, now everything is bearish. Now all the structure is bearish, and even the momentum turned bearish too, based on those little rules that I have, right? And then from here, again, let's just keep the simple visual of things. I think I do like this visual a lot. Focus on the 17, and there goes the midpoint of the 17, and I believe it made a huge drop. Huge drop. I think we were able to catch that during class. And okay, all right, let's wait for the next one, because I still think that the sellers are dominant. We'll miss the pullback, but we have to let price adjust itself. Let the buyers step in for a little bit. There they go. Okay. So it's kind of, we always got to tell ourselves a story, right? It's like sellers sold. Now let the buyers step in. All right. Buyers have stepped in. Not in this push up, right? Not here. Buyers have stepped in there. Okay. All right. Buyers have stepped in. Okay. The market has made a pullback. Okay. And the market has taken a breath and to recover for its next sprint. Okay. So now, when do we enter? What would you say when will we enter, Mr. Ron?
So we're looking for what? Sales or buy? We're looking for buys.
We're looking for a sell on this one. We're looking for a sell.
When that blue box 17 get to the top up there.
That's it. All right, let's see that. We'll play with that. Let's see.
Yeah.
KG's asking. So only when the flag changes. That's the story that I'm telling myself right now, KG. Okay, that's the story that I'm telling myself right now on this
And I
example.
like this. It gives you a better flow. I like this.
Okay, sorry. Let some buyers step in. Let them get some structure. Okay, because again, though, we need those pullbacks, right? The market does an impulse and does a correction. Perfect. All right. So, all right. Even though, and again, right here is, um, let's fib the high to low. Let's fib the big structure. Okay, high to low. We want the 17 sellers to step in by the flag being down here. Okay, and they got us to that 61% level, right? They got us to that 61% level. We would normally enter here, stop loss somewhere in pips, but more specifically, right, the 17 gives us the entry and the stop loss. So let's check this out. All right, Mr. Ron, I'm gonna put it forward here. You let me know when the sell is ready. Okay, let me see. You see that? Now
Yeah, there you go.
the sell's ready, right? At least now we have a shot. Now we have a shot of things. Okay. And we only need this box right here, the 17 box, to, and we're,
And it's below the 50% of that box.
a lot of them box. Yeah, absolutely. So this is the black line here. That's that one there. We can zoom in. Okay. And in this example, let's say we always enter at the 50% of every box. Where will the stop loss go here, Mr. Ron?
At the top of the 17 box.
Mm-hmm. And then we can take it back down to the low.
To the low, yeah.
Everything else checks off bearish. It didn't really trigger our entry, but look at all that move that we got. Okay, it's a lot of pips. And actually, our smarter TP would have been maybe what 23%, right? Of that impulse stance. I think right there, price found the way to turn around. It didn't hit the zero, or did it? I don't remember if it did or not. No, it didn't. Look at that big old turn. All right, guys. But again, so this system is the strongest, in my opinion, whenever we have the NYSE open. I think that's the strongest it is, the most fluid. All the volume is in, so we can use the entire boxes and flags all together. It will work on another, on other sessions. But at the same time, it's always been made for the the NYSE. Yeah. And yeah, it is a lot cleaner visually. It really is. I do think it is. Just kind of working the flags. We technically don't need box, man. Right? If anything, we just use the 17 box for entry or the 108. But yeah, visually it is a lot cleaner. A lot cleaner. All right, let's do a top-down analysis, guys, and we will shut it down for today. Thank you guys for the attendance. Hopefully, you got a lot of value here on the session with the impulse and structure. Um, I'm gonna have a small little group help me test some of the things out, and then once we test those out, we'll open this. We'll we'll push the update for everybody that has access to this. Yeah, if you're in the session, you should have access to it. Ah,
Yeah, I'm still waiting on you.
okay, but Miss Iris, for the other stuff that we're talking about, right? Yeah, try to follow up with you.
No, I can't see on my iPhone.
What do you mean?
Because everything mixed up on the thing that you're trying to straighten up on my Dell or my
Yeah, that's what I meant. That's what I meant.
MacBook. So I'm looking at a little iPhone.
That's what I meant. Yeah, we'll try to touch base on that one, Miss Cyrus, early next week. Yes, KG. That's the best confirmation. It is best to get in the trade once all midpoints are in the direction. Okay, that's kind of the best there. Okay, that gives us more confirmation, gives us a pullback, um, for sure. Let's go ahead and yeah, that will definitely makes us be patient. All right, top of the analysis, guys, to close out. Previous week was bearish, so go ahead and mark that up. Previous weekly high, previous weekly low. And we'll pivot. Remember, again, we're going to take into consideration these 3 bullish weeks in this example because they're there trying to keep price bullish. All right, so then let's go to the 4-hour chart from here. All right, so here's how the 4-hour chart looks. Obviously, last week's price action behaved like as it was an inside bar scenario. The 4,000 price level has been stuck there, and the question is, right, will the previous week have enough have momentum to really push us down? Okay, or are we using the volume of these last 3 bullish weeks? Okay, so on this scale of things,
I can't tell your hours. I don't see your time frames.
I'm sorry.
I can't see your time frames.
They should be at the top up here. So you
Not on my
see.
iPhone. I can't see them.
You're on the 1 hour. That's what I think she's asking.
Say it again, Daniel.
You're on a 4 hour now, so she was just, I think, asking what time frame you were on.
Okay.
No, I can't see the time frames. I open it up enough to see. I'm moving. I can't see nothing. I can't see the time frame.
Oh, the iPhone's a pain. Yeah.
Are you like watching my Zoom, Miss Iris, or like your trading view?
I'm watching your Zoom.
Oh, gotcha. Oh, interesting. Yeah, that just must be like the way it's feeding off to your Zoom.
I'm lost about 2 or 3 weeks now.
Yeah. Let's see here. All right, so also too, Ms. Iris, the recording will be there. Maybe you can watch the recording and probably help out a little bit. But let me continue right quick on and wrap this part up. So yeah, 3 bullish consecutive weeks. It is a strong one here. What's interesting here, right? We do fib the previous, I guess we always do, right? We fib the previous weekly candle. Right there. Okay. We are above the 23% prevented from price from dropping lower. That's for sure. The 23% prevented price from dropping lower. So previous weekly, 23%. Okay. It's behaving like that support. Okay. This was supposed to trend us down, but it didn't. So I think that's what's going to give us a stronger push back to the top side, taking us back to 50% or 61% of the 2 previous weeks. Okay. Which is, up there as well. So I think that's kind of where it's leading off to. Let's check the 2-hour time frame. We do have 2 consecutive bullish days. We made a higher high, and I believe we closed bullish. Let's see. Yeah. So we have 3 consecutive bullish closes. So if these 3 are strong enough, they will take us higher, right? To fill up, to balance out the charts up there. And yeah, so this will take us at least back to that level up there, at least back to the previous weekly high, or the 78% to me is the target for now. Let me see if I can find some ETM candlesticks on on the chart here, and then we can use those as equilibrium. We do have this big day, October 21st. Left a nice BC up there. Let's check the 12-hour time frame. Let's see here. Move this to the left a little bit for now. 8-hour. That 4,000 price level is just keeping everything there. 2-hour. Yeah, there's nothing, very clean. All right. So we just kind of leave it like this, guys. I'm still thinking that we do have some momentum bullish. Okay. And I can see it's going there. I can see it's going to the top side. Right. Of that candlestick right there. So remember, these are the last 3 weeks. Those are the ones we're taking into consideration.
And that would make sense if we're trying to finish off an Elliott wave.
Where you see it there, gentlemen?
It's interesting. Of course, we got our impulse correction, B, C, D, come back. We take out the first low here, come back for momentum up to this side before it comes back down to here.
Okay. 1, 2, 3. I see what you're saying. So this was the LA wave right here.
Yeah, right.
And we technically broke it, right? We broke code 4.
Yep.
Perfect. Okay, yeah. Yeah, but to start the week, guys, I think I like us to push up to the previous weekly high, and then from there, let's see if wants to go a little bit higher or find some equilibrium to get that big push down. But let me share this chart. Gracias, Pablo. Andamos. Gold outlook. There we go. Okay, guys, we will begin to wrap it up here. Thank you guys for the attendance. We'll put this recording here on the YouTube as soon as possible, and we'll see you guys next week on the trading week. Let's see if we can get some trends with gold, and we'll keep an eye on this chart. Check it out, and everybody enjoy the rest of your Sunday. Have a great day. Thank you.